I'm Alistair. I'm editor of Venture Capital Journal. Let's just a quick introduction from each of you. Just who are you? Who are you with, Jeff?
Sure. My name is Jeff Tannenbaum. I'm with a an early stage venture firm called Blue Run Ventures, and we focus almost entirely on everything that's a mobile-first type of investment. Anything that powers the mobile ecosystem. It's a big part of our investment thesis.
Now, you don't do growth, but you'll do follow-on, right?
We'll do seed and Series A investing. Okay. So our policy is first money in on a startup, and we'll reserve for follow-ons.
I'm Nunu, managing partner at Strat Capital. We're solely focused on early stage as well as Series C, Series A investments. We're geographically agnostic, so we invest all over the world. We've invested, for example, in Napa that you saw today. We've invested in companies in Marietta, Georgia, like Metago, that does the Esther file manager with 65 million users. And we obviously invest in San Francisco, where we're based. We have a couple of claims to fame, none of them really very important, but anyway, I'll just quote them. The first one is we're mobile only, mobile first. We started with mobile apps. We have no issue with HTML5 and browser, but we started with mobile apps and focused very much on consumer mobile apps. We only invest on consumer mobile apps at this stage. And we are what people would now call a quantitative VC, a quant VC or whatever. I prefer analytics driven, so we look at traction. We have our own statistical algorithms. We act a little bit differently from other VCs in the early stage.
Like a correlation ventures, maybe? In some
it's a correlation ventures, but we don't do correlation with other VC investments. We do basically correlation with success between applications, and we decide to invest.
Excellent. Todd?
Great. Todd Simon. I'm an investment banker with Oppenheimer and head of digital media for Oppenheimer. My focus is on the consumer side, so that includes mobile and apps, but it's strictly consumer. As a bank, we focus really on two products, and that's IPOs and M&A. I spent most of my career as an M&A banker with Credit Suisse. Before joining Oppenheimer, but was also on the investment side of the family office, focusing on interactive enhanced television investments. I think that's pretty much it, other than to say that we just filed an IPO for Rocket Fuel about 30 minutes ago. So very excited about that.
Any details on that? The size?
You can read about it. Well, we just up the size.
You can write about it.
Yeah,
exactly.
We did just up the size of it, so we're voting on that, what's happening.
Okay.
And
I'll look it up on my phone.
What's important about that, I guess, is that Rocket Fuel is a great company, and that sort of improves the sort of ad tech ecosystem. That's great for everybody. Oh, dig it does. So.
I just asked Jeff if he knew who the investors were in Rocket Fuel. Do you know it, Todd?
Yeah, I mean, there's a lot of investors in there, but
it was
high quality VCs. Yeah.
Okay. Well, I ask this every year, and I want to do it again. It's really interesting to me, especially since I had 3 different phones in the last year. And I currently have an iPhone, I've got a BlackBerry, and an Android. So who here carries an iPhone? Maybe more than half. Android, any kind of Android? Yeah, I was going to get to that. Any kind of Windows? Now, wasn't Simon, it was Abraham who, did I hear you right? You said you had 3 phones? You carried, yeah. Did you say that during the last?
Somebody said they had 3 phones.
Yeah, I thought.
Okay, I'm a collector.
Well, who here uses more than one? Tablets? Any iPad users? Minis? Yeah. Simon, you mentioned during the last thing about wearables, which I wanted to hopefully talk about. Who here has a wearable?
Wow.
Yeah. Any kind of wearable, Nike, Fitbit. And that I think is really, I think that one is really relevant because Fitbit just raised $43 million, and we've seen a lot of fitness tracking devices raise money, and that seems like a hot area. We might, I mean, it's only mid-year, and we still have a few months to go. But what's been the hottest year to date, Jeff? What's been the hottest kind of investment trends you've seen so far?
So, just on the topic of wearables, you are seeing every form of wearable, the extension of your phone onto your watch, right? Which I think it's a big space. It's yet another screen. It's a faster way to access the data. I think my hunch is that that entire space becomes very commoditized over, as far as the hardware goes, over the next few years. So it's hard to say who's going to dominate in that space. I mean, Samsung's going to be coming out with something. One day maybe Apple will. And then you have companies like MetaWatch that are out there pulling data off of your phone. But it's hard to say who's going to win and who's going to dominate. Are there some industries that can come out of that? Probably. There's probably some interesting cloud-based technology that can wire it all together. I think it's still a little too early to say that.
Is it a hardware play, a mobile play, a data play?
I think wearables are a hardware play. I think they are an extension of mobile. I think I'd say, well, when I say wearables, what I mean, I was referring to the watches.
Sure.
Okay.
The Pebbles,
because the Pebbles of the world, right? Because like the Fitbits, that's old news already, right? Like that was so last year. But I mean, but that's here to stay. The whole quantified self movement is absolutely here to stay. But I think it's very much a hardware play. But I'm happy, after these gentlemen speak, I'm happy to dive into where I think the whole big data side for the quantified self is and how that all ties into mobile.
You want to take that?
Trends of the
financial, looking trends.
I mean, I'll talk from our perspective.
Yes.
I've spent quite a bit of time looking at well-being and fitness still. A bit bummed up that finally MyFitnessPal took some funding. It wasn't from us, but life.
Oh yeah, that's just this past week.
But there's a couple of interesting things out there that we've been looking at. It is, the guys who are using the quantifiable, arena and what hardware is producing. But I think it's going beyond that. There's a lot of interesting niches that we've looked at that I think are highly monetizable, very exciting. Secondly, dating. I've spent quite a lot of time on dating. My wife has wondered. And it's a little bit of a problem because my wife wasn't quite living in the Bay Area until recently. So she's like, is this like a message that you're sending me through?
Do you have as many dating apps on your phone as I do? I test like every dating app under the sun.
That's why he has so many phones.
That's why there's the second self.
So we looked a lot of dating. Very excited about mobile first type dating applications. There's a couple of leaders out there. We found some that we found were very exciting, and we look forward at some point to investing in the space. And then the third area for me that is getting exciting, I think maybe a bit too early, but it's just a passion of mine, is what I would call artificial intelligence-led type applications that are basically trying to go into all your sort of social sphere. For me, social right now is very Gen 1, very manual, and everyone that's trying to really go on top of it and give you really interesting data. I don't like the term big data. I think I prefer the term right data, and I think we're getting there. Developers are getting smart about the data they really need to evaluate on analytics. But beyond that, I'd like companies to use my data better within sort of the privacy of the boundaries I give them, and we're starting to see some interesting ones out there that get us very excited.
I'd say dating is an area where Oppenheimer is very active. We're working on one particular company that may go public soon, and we're working with some other folks on doing some consolidating, and we've seen some good businesses, good products emerge that we like. And I think the most important angle there is the data, is the potential for the expectation that there's deep user interest, deep interest in the app. So we like that a lot. I jotted down a couple of sectors that we like, not because we're knowledgeable venture investors, we don't have the expertise, the horsepower that these guys have, but I think of it from maybe an M&A perspective. The perspective I have is that I like sectors where there are large, vibrant ecosystems that can produce M&A outcomes. And some of the more nascent sort of areas that I like because of that are the mobile video app space. I don't think we've seen any. I haven't seen any great sort of first screen, second screen apps just yet, but I'm a big believer in that there's a huge opportunity there. And it's because it creates, like Fitbit, creates another screen. And when you have another screen, you have more opportunities to monetize. So it's going to be additive. It's going to be 1 + 1 = at least 2.2. And then in the sort of the driving space, the automotive space, there's a number of interesting apps that we've seen, and I guess what's most important, again, from my perspective, is that you've got automakers that want to create app marketplaces in their cars. You've got tier 1 suppliers that are doing it too, and a number of other folks that again want to own or be participants in that ecosystem. So anyway, that's the kind of perspective we want. Publishers, traditional publishers, marketing companies, all potential acquirers. And maybe just like to take one more point, and that is where the app developer communities, whether it's BlackBerry or anybody else, is sort of very focused on sort of supporting developers in sort of a broad way. We'd love to see that kind of be connected to other ecosystems that are not about apps.
Yes.
But they tend to be acquirers of apps. So Yelp has just bought SeatMe. If you define Yelp as being in this business and not in the reservations business, you miss that they are extending. And those are great digital marketplaces, and how do they survive? How do they remain vibrant? They need to sometimes extend laterally. So I'd love to see the developer communities.
Well, it almost sounds, I mean, you guys pretty much named everything under the sun, right? I mean, everything is hot. Is there?
I wanted to dive into one area there that we
Go
were
for
just
it.
talking about. So the area of mobile health, in my opinion, is, we went through the first wave of mobile health maybe over the past year or two. A lot of apps, a lot of simple peripherals, or peripherals that were very high priced because just the cost of hardware was too high. But I think we're about to hit the next wave of mobile health services, and maybe this wave will be more likely to stick. And the basic theory, the basic thesis that I have behind it is our phones. I mean, phones are everywhere now. We all have them. They're on the edge of the network. So if we can do quick triage on certain health issues in the palm of our hand without ever having to go step foot into a doctor's office, as parents saving ourselves a few minutes here and there, running back and forth, making appointments, that's a lifesaver. It's a game changer. So what are we willing to pay for that as consumers? And we are actually willing to pay a few dollars for that. How do insurance companies look at that? How do we save a lot of money for insurance companies? So I'll give one example of a really interesting company that I've seen. Maybe you guys have heard of it. It's called Kinza. And there was a big crowdfunding campaign on it recently. It's a thermometer. These guys are out of New York.
K-I-N-S-A?
K-I-N-S-A.
Yeah.
It's a thermometer that plugs into the headphone jack of your phone, much like Square plugs into the headphone jack. And they figured out how to manufacture this thing for under $1. So it's pretty much disposable. And it can take your temperature. And right there on the app, you can hit a few buttons and say your other symptoms, right? It's completely icon-based. The data can go into the cloud. The data can then go to a healthcare provider. It can predict outbreaks better than Google Flu can predict outbreaks all day, right? Because all the data in your neighborhood is real time. It's based on temperature. It's a very simple concept. But those are the very simple things that are game changers. And the cost of hardware has come down so much to manufacture these types of devices that it's almost worth it to take a really deep second look at this space, because there's going to be a lot of really cool game changers over the next
If you
few
want to see
years.
that in action, go to India.
Oh yeah, for sure.
Mobile health networks are
Yes.
already in existence there because they don't have the doctors to send into remote villages, and so they're building applications on mobile devices today. They have been doing it for the last 5-10 years.
Yes.
That are designed to help extend the reach of the healthcare
And
system.
it makes a big difference.
Yeah, huge.
They're game changers.
Yeah.
Yeah.
I
was going to say there's a company called, in New York called Aptique, which is basically managing, certifying, curating app stores for hospitals. So doctors can prescribe the apps out of that app store.
They prescribe apps now.
The issue is that there just aren't enough, great apps.
Take 2 levels of Candy Crush.
Any other questions? Yeah.
So I got a question, and it kind of correlates to the 3 things you guys just talked about, right? Quantified self, the dating apps, these healthcare services. How far do we allow privacy to break down to where we get to a Gattaca-like environment where your potential suitors are checking out everything you've ever done, including your health history, how often you really run, what
Potential
you're really
suitors,
reading off
potential
of Amazon.
employers, everything.
Yeah.
I mean, I think it becomes a personal question. If you want to opt in and you want to share some data, why not?
I think that one's out of the bag already. Sort of. And it's sort of the generation. For me, I would have answered the same thing as Jeff, saying it is our option and we can say if we're in or not, etc. But I would look at it from a different perspective. You'll start seeing a generation of people that's willing to share everything about what they're doing. And that's scary. That's actually much more scary than what NSA and other guys are doing. Because if people don't really care too much about privacy, they don't value other people's privacy either. You can only assume what's going to go on in the next 30 to 50 years. So I would say in general, that's one of the things. Measures to stop that a little bit. I would be very excited when platform owners like Google, where I think are well equipped to do that, application developers, small application developers start really thinking, as I was saying, about using my data, giving it back to me, and not using it for targeting, blah, 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 right? And I'm willing to pay for that, because that has a lot of value for me. So some of that comes back to a basic subscription model, or something like that I'm willing to pay, but please don't use my data for other purposes. At least for us a little bit older, that probably would have some value. And it would lead, I think, to a lot of innovation, to fundamental innovation in areas like social networking, which I think are just very stale right now. Everyone's trying to do the same thing, and let's do another social network with an angle that is more vertical than the previous one, and let's try and monetize it in a different way. I mean, let's just redefine it. And that's, I think, the cool part. And we can redefine it with data that exists today. That, for me, is the fundamental, interesting aspect of it. The data already exists.
Do you think if Facebook charged $1 a month not to share your data, people would pay for that?
I think that's crazy.
That's
Sorry.
crazy.
If Facebook is going to charge me not to share my data, I hope Facebook falls on face of it. I think that's a ridiculous concept, though, right?
That's what you're.
But I think some people would pay, Jeff.
Yeah, of course, But that's like saying they're going to hold your data hostage, and I just don't think that's how you build
Google's
good.
job.
Yeah.
That's the way to go, yeah.
They have their open data.
Yeah, I actually predict we're going to head towards something like that. It's going to be a menu, and you're going to pay something for it.
Yeah.
But I think the question is a bit loaded because you're talking about an existing service where people are already doing so.
Right.
It is a little bit like hijacking. But if there is a new service that is proposed to me where I'm willing to share information and it doesn't use it for any other purposes, we see now a lot of calendar type applications like Tempo, etc., that are using some intelligence. I mean, if that data doesn't get propagated, that's very valuable, and I would be willing to pay for it.
Speaking of privacy, do you think that's why Snapchat became such a...
Good, I was just about to bring up Snapchat.
Great minds. Well, go for it.
So Snapchat is a very interesting demonstration of what Gen Z embraces. And we, as an investor, I spend a lot of time trying to get into the heads of how that generation thinks. And sometimes it's hard because as you get older, there's a bigger disconnect, right? But Snapchat is it's a disposable economy.
Right.
You create something that just disappears. No one cares about holding on to anything anymore. That's why the sharing economy just keeps growing, right? With the Gen Z world. So I think Snapchat's a fascinating thing that I don't know anyone that could have possibly really ever predicted it, but now that it's here, yes, you predicted it?
No. I did not. But these guys, KeepSafe, actually launched the service to share for a very small amount of time.
Yes.
Before even Snapchat launched, and it wasn't actually very successful for them because they were coming, as you know very well, they're a locker, right? So it allows you to lock stuff on your phone, and hopefully will allow you to lock stuff on your cloud. But I do think there's a couple of other players in the market that would try to do it. I think Snapchat's implementation really hit the right corner, and that's why they took off.
The Snapchat world, talking about your topic of dating and why you guys, I think, like that whole roll-up in the M&A area of dating, because there's a fortune to be made there. That generation is just the way they socialize, the way they flirt, the way they interact on mobile and mobile only. It's so important to focus on that and look for opportunities in that space, and it plays into new types of social networks. It plays into new types of services like Snapchat, and ultimately dating services and virtual goods. For example, we have this company in China called Chungba, and it's a karaoke app, where you record yourself singing, and then it gets syndicated. Well, this app, no one could have really ever predicted this. We couldn't have predicted this. It's like a top app in the App Store, and the reason why is not because of the karaoke, but it's because people can upload profile pictures. It's like MySpace from years ago. You upload profile pictures of yourself, and people give you virtual goods, not because you're a great singer, but because you're cute. And it's exchanging virtual goods for having a good voice, being good looking, and lightly socializing. It's very light touch socialization.
What's the demographic?
It skews younger. I'm gonna say it's like
Okay.
14 to 17, 18. But it's a killer app in that space. Because karaoke is part of the culture. But anyway, it's just like
You looking it up, Chumba?
so it's a rather interesting concept.
He's a member.
I am too. I'll find
Maybe
out.
when the wine goes flowing later, we'll see some more. I can ask a question. Is there anything else from the audience? Yes.
Payment space in that building.
We need it.
What,
We need it.
so I guess I'll preface it by saying I think that for effective developer ecosystems for folks like BlackBerry, for Nook, for et cetera, they got to be able to make revenues from their stores. They're not going to be able to spend what BlackBerry spent to build an ecosystem and keep them over the long run. Let's say we make some revenues. How does that logjam get broken so that people beyond Google Wallet, Amazon now, and maybe Samsung can get paid?
It would be nice to have a universal solution, and I have been searching for one forever. And it's, a new one pops up every day. There's dozens of these. They can't get enough market share, and so it's just majorly fragmented, and no one has won. And like that leads to the problem of shopping on mobile, and how just we were talking about this earlier at lunch today. I think like there's so many abandoned shopping carts, right? You love. Fact is, you are willing to open up more marketing emails on your mobile device than on your desktop. Maybe because you're killing time, whatever. And you find an item that you like, but the minute you click and add it to your shopping cart, you're going to abandon that shopping cart once you hit the paywall. How do we solve that problem? I'm always looking for companies that are solving that problem.
But I think, Jeff, it's even more basic than that. I think the fact is, even the existing ecosystems you mentioned, Google, I was talking about it earlier, don't necessarily work. Right? I mean, they had a bug for 6 months, nobody knew why, nobody solved it. I was a user. In this case, it wasn't like they had a huge churn, this company, because several users were being dropped out. I was a user. I was getting an email saying, your subscription was canceled. I'm like, sorry? The credit card is working, everything's fine, so why was it canceled, right? I had no clue. Let's assume this was a service that I actually needed to use on a monthly basis, that, for example, had all my pictures or had something that I had some big utility value into that. I'd be very pissed off, I have to say. And it's not, just solve the damn basic stuff, right? Even on Google, I'd like to be able to be charged normally, like normally I am on iOS. So for me, it starts with basic stuff, and then we can do all of the rest of the stuff we talked about.
All right.
But just get that basic stuff right.
Sorry. We have so much we have yet to cover. Domingo, do you have a
Yeah,
question?
just macro-wise, we see a lot of the VC funds, the new funds starting to shrink a little bit. Investment sizes going maybe smaller and more focused into the early stage, or more focused into the software play, like the hardware. Do you guys think that's going to continue?
Yeah.
And will that change the type of companies that we see in the next few years?
I have an analogy for that, right? This is, I'm a Giants fan. This is like this season for the Giants. So it's, at the end of the day, they won 2 World Series in the last 3 years. This year, they're doing really badly. And the key question for a general manager is going to be, am I going to switch the entire team, or I'm just going to say, they're doing badly, but they just won a World Series, so I'm going to keep them, right? And comparing this a little bit with some of the business models we've seen, even from some of the big VC funds, that's the question some of them are facing. The ones that are not having as good returns as they would like to be having. The question is, fundamentally, do we switch who we are, or do we just stay as we are and we think it's going to be networking based, etc., and we're going to be successful eventually? And it's a really tough decision to make. And I suspect most big VCs are going to make the decision that the Giants are making this season, which is, this has worked, it will continue working. Right? So heavily networking based, not a lot of full services offered, but probably quite a bit of what Keiretsu mentality is out there. Very good connections on the business development, M&A arena to try and push some of the exits. And ultimately that will happen. Now tier 2 and tier 3, many of them will disappear, they'll contract, that's normal. I think the industry probably has too many funds out there, and maybe I'm one of those too many as well, so I'm not saying this with any disregard to existing funds. And then I think we're going to get more specialized funds, right? And VC funds. I think we're part of that breed, but there's other breeds of players in that market. we're more of a quantitative VC. There are guys out there that can, basically, who I mean, can generate a lot of money under management and therefore can have a ton of management fees and therefore can have a full services approach, which is interesting as well and can be quite valuable for their portfolio companies. And there's going to be other guys who are going to be very innovative on how they basically generate the ecosystem of their own portfolio companies with social tools, Yammer type stuff for their own social, for their own portfolio companies. So I think you're going to have some innovation with some specialized players. Overall, most
specialized
of
VCs, is maybe as well as specialized incubators, accelerators.
There was one part of your question. I feel like he covered a good part of it. I want to just answer one thing about hardware.
Yeah.
I think the fact that there is so much great crowdfunding going on these days. So, and we were chatting about this on the phone yesterday. When a crowdfunding campaign gets to a point where it tips, and it tips way beyond what anyone ever expected. We could take Pebble Watch, for example, like 10 or 11 million it raised, like 10 times its goal, right? It's a signal, and that's all it is. It's a signal to the investors that, hey, there may be some market interest in this type of product, right? And what we're seeing is a lot of hardware ideas that people just couldn't really ever get launched. You can get them crowdfunded. It's essentially pre-sales before you ever even break ground on this product. And because the cost of manufacturing is going down so much, it makes sense that you're going to see even more hardware-related startups. I think it's coming back. I think you're just going to see a small resurgence, and I think you're going to see investors investing in it again. And there's a great example. There's in San Francisco, there's a place called Lemnos Labs, which is a hardware incubator, I guess, accelerator, and they're doing well. They're producing some really interesting companies.
I think, sorry to just amping on that, I think there's a little bit of misconception on what the venture capitalist is. We are a little bit surfer pickers, right? And the difficult part of actually being surfer pickers is sometimes it's not even picking the surfer, but picking the locale or the right locale that they're using to surf in. So actually figuring out if there are waves that are going to take them to the next level. Are they in a market, as you were saying? Is this a market that exists? And having those indications. And typically surfers can create waves at the end of the day. They can be really exceptional, but if there's no momentum, they're not going to get there. And if the surfer's not very good, then he's just going to basically fail his mission at the end of the day as well. So I think really getting those two things together, market plus the person and the team, is really the business we're in.
Final.
Yeah, well, I don't know if it'll be final, but these guys are.
Well, the band is here.
That's all I say. As an outsider looking in, I mean, we spend a lot of time with private equity groups, certainly not in this space, of course, and they go through sort of growth and contraction cycles, not terribly frequently, frankly, and but other sectors go through more rapid sort of growth and contraction cycles, and it forces innovation. And the fact that a lot of sort of the most outstanding quality of a VC is defined as connectedness and networking tells me there isn't as much innovation. So like in the private equity space, you see clubbing for deals, but also clubbing for combined knowledge. And Google has Google Ventures, and one thing you can imagine is a number of companies getting together and saying, we want to be the superpower in the VC space. It wouldn't disenfranchise everybody, but it would be a major type of innovation. So I don't think we see as much of the cycling as I could imagine we could see.
Excellent. I think we have to end it. Give these guys a hand. Great job.
So buses are outside. The thing I would ask you is if you just go ahead and we'll continue the conversation there. Next year, this is going to be called the Napa Retreat, N-A-P-P-A. Somebody tweeted that, and it makes so much sense. Thank you very much. See you over at Hall Wines.
I know the co-founders.